And, as a realtor, you want to see that piece of paper that says, I am pre-approved. And the first thing you should ask them is, did you give your banker or broker pay stubs? Did you give them any information? And if they say yes, then they'll be fully approved, as opposed to you can go on a computer and get a pre-qual in 15 seconds off any website, right?
Welcome to Beyond the Keys podcast. Today we're looking at the Mortgage 101 for 2025. We're here with Travis Bruce from the mortgage firm, and we're going to be looking into what it's like or what first-time home buyers would look at if they're looking to buy a property, what refinancing might look like, and what the options are with that, and maybe upcoming mortgage rule changes that we might see coming into next year, right?
Yeah.
So that's kind of, we want to cover kind of all of our basis with we're meeting and kind of going over this. We're just going to have an open conversation. So maybe I'll get Travis to give me and us a little bit of a background because you've been in this industry for quite a long time, correct?
Correct, yes.
And the mortgage firm for you is a new company that you've created, correct? Or
No, it's a brokerage firm that was around that I joined.
Oh, okay.
Yeah, after 20 some years in the bank doing mortgages.
Right.
So
that was my misunderstanding.
Yeah.
Sorry.
So I think I started when I was about 15. So
Yeah, perfect. That's
Yeah.
awesome. Yeah. So, so you were in the bank before, and what was it? Did you do mortgages and stuff at that time?
That's all I've done.
Okay.
I was a mortgage advisor for about 10 years, one of the big 5 banks, and then from there I went into management, running the mortgage advisor team at a different bank. So it was the whole province I was in charge of. So it's hiring, training, the whole 9 yards. And I've seen it all.
And going into 2025, I mean, we've seen a lot in the last couple of years just because of the changing of interest rates.
Yeah.
We've seen the amortization, I guess, be raised from 25 to 30 years. Is that correct? Or is that in some cases? Or?
So what's happening is, December 15th is when the change comes in. All first-time home buyers now can go from 25 to 30 years on their amortization.
Oh, it's just first-time home buyers.
Yeah.
Okay.
But before first-time home buyers were also allowed to do it up to 30 years on new construction, okay?
Okay.
So on the 30 years also, anybody now who's buying new construction can go up to 30 years.
Oh, interesting. So
Yeah.
we're really trying to promote new construction and then also giving, hopefully, the new buyers a little bit more of a helping hand up, just because prices are outrageous and they can't afford to get into it, right?
Yeah, correct. Like they're trying to get everybody in the market. Is that going to help? It probably will a little bit. A lot of it will depend on, is that going to drive the price of homes up? I don't know. That'd be your expertise.
Yeah. I mean, from my understanding and talking to, some builders, unfortunately, they're just waiting till interest rates drop so that they then can raise the prices, because that's just the cost of lots and so forth. The servicing that's going up in price. So same with everything else, right? So
100%.
It's going to be a chain effect. It's not like you're going to be able to afford more, at least on the new builder side. I think that's don't quote me on every new builder, but at least from my kind of conversations I've had, that's I think is what's happening. I mean, builders aren't making as much as that you think they do either, right?
Yeah.
There are some builders that have actually left Saskatchewan this year and moved out because they just couldn't make it here, and they were a larger builder too, right? So, if we're looking at new home buyers, going into it, because there's a lot of people looking, what do you think the first thing that a new home buyer needs to do?
The first thing they absolutely need to do is get a pre-approval, right?
Right.
And I see it all the time. People think they have the pre-approvals when in fact they don't. They have a pre-qualification, and it takes them out of the buying power. It's what we like to do, or myself, what I like to do is a pre-approval. I ask for all pay stubs up front. I ask for credit checks, and then I can shop around to my different lenders and get them the best rate,
Right.
Which always isn't the number one key,
Right.
but people like to hear that rate, right?
Right.
But
you're paying less, so they do like to pay less.
Exactly.
So,
And as a realtor, you want to see that piece of paper that says, I am pre-approved. And the first thing you should ask them is, did you give your banker or broker pay stubs? Did you give them any information? And if they say yes, then you know they'll be fully approved, as opposed to just you can go on a computer and get a pre-qual in 15 seconds off any website, right?
Oh, for sure. I mean, when we sit down with our buyers, we, especially a new home buyer, we have them come into the office, sit down, go over our buyer's guide, let them understand what the buying process is.
Yeah.
And then that's what our first question is, are you pre-approved? But the thing is, and we won't start looking at houses till that happens, because we also don't want them to be looking out of their price range and be disappointed when they get approval in. Why do you think there's such a misconception on what approved is? Because a lot of times people are like, yeah, I'm approved. And then, like, what do you think is it, the lack of communication, the lack of questions from the home buyer to the bank or the lender? Or do you think it is how the lender communicates to the buyer? Does that make sense? 'Cause
It does.
They think they're approved, but like,
I think it's a little bit of both. You know, on the one side, if your lender doesn't ask you for pay stubs, for documentation, for lack of better terms,
right.
they're just doing a pre-qual. They'll take, how much do you make a year, Greg?
Right.
Well, I make 100,000. Oh, okay. You're good to go buy a
Yeah.
house then at 44,000 a year in payments,
And
right?
I forgot about my truck, and I forgot to mention my boat and everything
Oh, the whole
else,
9
right?
yards. Oh, yeah. Then I'm co-signed on a loan with somebody. You see it all, right? And
Right.
unless you do a complete picture on it, you don't get the true picture of what they can actually afford.
Okay.
Right.
That makes sense. Yeah. And so I guess, as you said, pre-approval is the number one thing to be able to start. One misconception a lot of home buyers have is that, okay, so if I'm approved for that financing, then I'm 100% approved for that house. And that's not always the case, right?
No, it's not. You know, part of it is CMHC or whoever your insurer is has to approve the deal if it's an insured deal, so less than 20% down payment. But you know, I always tell my clients when they're pre-approved, whatever you do between now and your purchase, don't touch your credit.
Right.
Unless you're making payments on it. Because I've had deals that have come across my desk, we pre-approved them, then they find a place, and then by the time we're running all that, well, why do you have this new vehicle showing up? Oh, I just bought it last week.
Right.
Well, that now adds into your ratios, and unfortunately, we're out of it now.
Yeah, we've seen, I mean, we haven't seen it a lot, but we've seen some deals fall apart right at possession date just because something like that happened.
Yeah.
And the worst thing that can happen is that you lose your deposit, and then sometimes when people are doing a bridge loan,
Yeah.
then they're also then losing that amount of money that they would have been paying out for that penalty, right?
That's
If you were
correct, yeah.
transferring over to something else, right?
Yeah,
So,
no, it's just being about transparent with your clients and upfront and keeping them in the loop on everything, right? And that's what it is.
right. A lot of people sometimes think, you know what, I'm going to wait for my interest rates to go down before I'm going to buy a property.
Yeah.
In Saskatoon, some neighborhoods we've seen raise from 10 to 15% within the last year. So that wouldn't give them a better deal if they waited for a better interest rate over that time, right?
No, you're exactly right. It's funny you said that. I was talking to a colleague of mine the other day from Ontario,
Right.
and that's what we were talking about was when is the right time to buy? Is
Yeah.
it in the spring? Is it in the fall? We came up with it's when you're ready.
Yeah.
Right? Like you've said to me in the past, there is by 10 years ago, why are we waiting?
Right. Yeah, it's interesting. Ryan and I mean, have been in real estate now. I think I'm in 19, he's in 17 years. And we've had some friends tell us, like, no, we're going to wait till the market goes down. and it's like 8 years later, they keep on saying the same thing. And it's
Yeah.
just like, well, at least what we're seeing is that it's actually probably going to keep on increasing more because of construction costs and shortages and so forth, and specifically Saskatchewan, at least
Correct.
from where we're seeing. So you're right. Whenever the time is right and you can afford to be in that home and you know that you've got a good job and so forth, it's time to buy.
Yeah.
I think from our point of view, a lot of times it's like, just get into the market. You don't need to get into that expensive house and so forth and over leverage yourself. Get into something that you can afford, build some equity, just so that you're seeing the increase in the market as we go.
100% agreed. 100% on that.
Because do you see a lot of times first-time home buyers making that mistake to where they try to push that? Because, I mean,
I would say what I see them, they always have their dream home in mind, right?
Right.
And then they come in and I said, well, no, unfortunately, this is what you can afford. You can't afford that. Well, we'll save up for that.
Right.
And I said, okay, but I'm not your realtor. I'm not going to step on their toes, but they're going to be the first to tell you, if you save up for that,
Yeah.
well, now the price is going to increase from there, right?
Right. Yeah, you save up for 2 years. Now all of a sudden it costs you an extra maybe $10,000 for a deposit.
Exactly.
And it's went up 40 grand.
Yeah.
I mean, you're not getting anywhere, right?
Now you're behind the game, right?
Right, for sure.
100%.
So going into 2025, I mean, variable or fixed mortgages, right? So these are interesting things because, I mean, historically, it was always, from my point of view, was variable was always usually a better interest rate until almost March of 2020 or somewhere around there pre-COVID, everything changed, right? Interest rates then immediately dropped for the next couple of years. And then whoever was on a variable mortgage, when rates then started going up, got stuck with a lot of higher payments.
That's correct, yeah.
So in 2025, and I guess this is the decision to the buyer to be able to understand how much money they do have and if they can increase their payments, right? Because fixed, at least from my understanding, is that it's at least locked in for that 3 or 5 year term so that nothing's going to change.
That is correct, yeah. You know exactly what your monthly budget's going to be for the next 3, 4, 5 years, whatever your term is.
Right. And then how would that be when would you make the decision of being a variable in today's market? Because right now it's different.
Well, you know, we've got Bank Canada has a meeting. Well, I guess it would be tomorrow.
Okay.
Right, and I've been reading a lot of stuff from different economists from the big banks. Some are predicting 25 base point deduction. Some are saying up to 50. So we'll see where that goes. Right, like you look where we were last April. We were prime lending, I think, was about 7.2%. Right,
Scary.
So yeah, so everybody who was in a variable was anywhere from 0.5% to 1% off of that, depending what you were given when you signed. Right now it's 5.95, so you're 125 off. So, and every time 25 basis points comes off, works out to just around that $15 mark for every 100,000 you owe.
Interesting. And you were saying a 5-year fix right now you can get for 4.29.
Yeah.
I mean, we're shooting this. Just keep this in mind. We're shooting this in December.
Yeah.
So interest rates will kind of depend on what's happening in January when this launches, right? So,
100%. Yeah.
So at 4.29 is probably the lowest right now. Where do you think it might be in January?
I'm not going to sign any pieces of paper
No,
or
I
anything,
get it.
but I would say we're in a declining rate environment right now.
Right.
As January
so do you
hits,
say
I can see us.
Sub 4 or?
I would like to see it sub 4. I would hope it would be by March.
Right. Okay.
Just the trend we've been going in, the way bond yields are at right now, because they fluctuate daily.
Okay.
A lot of people always think just because your prime lending rate goes down or your overnight lending rate goes down from the Bank of Canada, my fixed rates are going to go down. They have nothing to do with the fixed rate. It's just variable on the Bank of Canada overnight lending rate, and the fixed rates is all on the bond yields. So
Okay.
a little bit of misconception on that, but everything's looking like we're going in a downward trend. I'd be surprised if we weren't below 4 by March.
Right. Do you see the amount of buyers, especially first-time home buyers, increasing as interest rates go down?
I wouldn't say I see the amount increasing. A lot more interest, like the phone's ringing, a lot more people asking questions, yes.
Right.
Not so many people are wanting to do the quick pre-approval right now, just more or less where they're at and things like that. So I try to stay in contact with as many first-time home buyers as I can, whether it's through my hockey network or wherever it may be, just to let them know where the market's at. And,
Right.
Yeah, we're ready. For whatever reason, everybody says spring, so I don't know.
Everybody wants to wait till spring.
Yeah, everybody wants to wait till spring for everything.
I mean, it is Saskatchewan. I mean, we've had 2 snowstorms. We've had pretty much, it's icy out there right now. So, I mean, everybody, it's nicer in spring. And maybe this question has already been answered, but like, what are the biggest mistakes first-time home buyers make or any buyer makes?
Well, a couple of mistakes like we spoke about earlier in regards to using credit after they've been pre-approved already, between their pre-approval and their purchase. That's a big one.
That's a no-no.
Like, yeah,
that's
100% no-no.
Don't get anything.
Yeah, but if they're not told, if they're not educated, they don't know any better, right?
Right.
We just got pre-approved.
So this is message for every single person listening right now. Once you get approved for a mortgage, don't go buy anything.
Yeah, exactly. Don't go buy the new furniture. Don't go fill the old house on the credit card and rack that up, because that could affect your approval between now and the time of possession date. So.
Right. So, so that's a good one. Is there anything else that we need to know going into 2025 that might be you see things changing in any different way? Like, do you think they'll push it to a 35-year amortization in some ways? Because wasn't it 35? Like when I first came into real estate, I've been in since 2005. Wasn't it that high way back then at one point?
Way back then when I first started as well, and as a mortgage advisor, we were at 35, and I want to say I'd have to look back, but I think we were at 40 at one point too. I could be wrong,
Right.
but I'm pretty sure there was 40 for a little bit as well. Then
Okay.
it went all of a sudden shot back down to 25, right?
Right.
But can you imagine paying a mortgage off 40 years later?
No, but I also can't imagine not owning a house and so forth and being able to rent one, right?
That's
like
true too.
our rent's 1%, like our vacancy rate is less than 1%.
Yeah.
We have 12 to 14,000 people immigrating to Saskatoon in the next year as coming from the Rentalmen's Association, or the Landlord Association, sorry. So it's all and I probably got that wrong because I think they just changed their name. But either way, that's where the stats came from when I was talking to Cam. And I'm just like, we're going to need more housing in Saskatchewan. Yeah. That's basically where we're at, and more rentals. So is there any other tips that you'd like to leave us with going in and closing this off?
Well, everyone asks, how can I save money on the mortgage, right? And there's a couple ways I tell clients, and that's just about educating them and staying in touch with them, right? You can get a year-end bonus at the end of the year, or a tax return. You can make a lump sum payment on your mortgage. A lot of people don't know about that unless they're told. And the other one is biweekly accelerated payments.
Yeah.
As opposed to just your normal biweekly. If you go with a biweekly accelerated, it's in essence making one extra monthly payment per year.
Yeah.
So over time, you're saving on interest.
Yeah, I pay every week.
There you go.
Yeah,
right?
I pay every week on mine, and it's a smaller amount, but you have to make sure that you got some money coming in.
Yeah, well, that's the thing too. You got to work with your budget and things like that, right?
Yeah. No, that's awesome. Well, we really appreciate you coming on to the Beyond the Keys podcast and sharing information that we find will be useful for a lot of new home buyers and anybody else that's out there, because I think these are things to take into consideration when you're looking to buy and sell. Going into New Year, we'll probably cover some things with bridge financing and refinancing and some other things, just because in our market right now, you can't make it subject to your property selling, right? And so that makes it a little bit harder just because of the competition. So thanks again for
you're very
joining
welcome.
us
Thanks
today.
for having me.
Where can they find you? If anybody wants to give you a call.
Well, they give me a call
email,
email is travis@brucemortgages.com. Phone number's right on the website, or reach out to yourself.
Okay, no, that sounds great. If anybody has any questions, or if you're looking for a buyer's guide that gives you details of what this process is and everything, we can then send that off to you. Thanks for joining us once again. If you guys have any questions or any different ideas, feel free to reach out to us. And have a great day.
Awesome.
Thank you.
Thank you.